Bitcoin could be hit the hardest in the next wave of volatility, and almost nobody is talking about why. This week might decide the short-term future of crypto in the United States. If you hold Bitcoin, Ethereum, or any crypto at all, you need to see this. Big things are happening in Washington. A major crypto regulation bill, the Crypto Market Structure Clarity Act, is headed for a key Senate vote this Thursday after being delayed by a snowstorm. And at the exact same time, whales are aggressively buying Bitcoin. Ethereum just saw hundreds of millions in inflows in 24 hours. Smart money is moving while the public is distracted. Let's break down what's happening, why it matters, and why this could be a turning point for crypto. New York Senator Kirsten Gillibrand just gave a major update on this bill, and her message was clear. The U.S. must create clear rules for crypto or risk losing the entire industry overseas. Right now, crypto sits in a gray area between commodities, which fall under CFTC oversight, and securities, which fall under SEC oversight. Lawmakers are working on two coordinated bills to regulate both sides of the market properly. This is huge because it would finally give legal clarity for crypto companies, consumer protections for investors, and a framework that allows institutions to enter the space. And according to Gillibrand, this effort has strong bipartisan support and has been worked on intensely for 6 months. She says she's very optimistic. She also pointed out something most people miss. Crypto is critical for the 30% of Americans who are unbanked or underbanked. Blockchain allows instant global value transfer without traditional banking rails. If the U.S. gets this regulation right, companies stay in America, institutions build here, and crypto becomes part of the financial system. If not, the industry moves abroad. That's why this week matters more than most realize. At the same time, prediction markets show an 81% chance of a U.S. government shutdown by Friday. That brings market uncertainty, risk-off sentiment, and potential short-term weakness across assets, including crypto. Technically, Bitcoin's former support between 90K and 100K has now turned into resistance. If that level isn't reclaimed, pressure could remain. But while retail investors are nervous, whales are buying, and Ethereum's data is especially interesting. The staking queue is at an all-time high, transactions at all-time highs, exchange reserves at all-time lows, daily inflows are massive, and transaction fees near record lows. This is classic accumulation behavior. Tom Lee recently said that the parabolic run in gold and silver is distracting people from the strengthening fundamentals of Bitcoin and Ethereum. And at Davos, institutions made it clear they are preparing to build on Ethereum and smart blockchains. This is what capitulation feels like. People are tired of crypto. Many just want a pump to exit. Attention has moved elsewhere. But historically, this is where long-term positions are built and where big opportunities are created. Cathie explained that much of the recent pain came from a massive flash crash caused by a Binance software glitch on October 10th, which triggered a $28 billion deleveraging across the market. When that happens, Bitcoin gets hit the hardest because it's the most liquid asset. Her view is that much of that unwind is now behind us. Bitcoin may base between 80K and 90K before the next move higher as the 4-year cycle resets. So, connect the dots. A major crypto regulation bill advancing in the Senate. Possible government shutdown causing fear. Whales accumulating Bitcoin and Ethereum, institutions preparing to build on Ethereum, retail investors capitulating, analysts calling this a bottoming phase. This is a classic setup where fear and opportunity exist at the same time.
Send this video to anyone who owns Bitcoin, Ethereum, or crypto. This week could shape what happens next. Stay informed, stay ahead, and pay attention to what smart money is doing right now.